Traders, welcome back to another trading psychology lecture. Today we're talking all about how your mindset, your psychology is stopping you from consistent profitability and success as an inner circle trader, as a trader who trades smart money concepts. Now, over the last few years running the education and performance coaching business, Master Your Trading Mindset, I've had many of my clients and students who are smart money concept traders, ICT traders, come to me with very common challenges, very common issues that they're facing. And over the years, I've developed ideas, principles, tools, strategies to help these traders manage their psychology so they can ultimately have better results as a smart money concept trader. And I've had many friends that are smart money concept traders as well that have consulted for this video to get some insights from what are the challenges they're facing, what are the challenges they see, so I could put together a masterclass for ICT and SMC traders to help them get better results and to ultimately help them manage their psychology, understand their psychology on a deeper level to ensure they're getting the results they desire. Now, if it's the first time checking into this particular channel, first and foremost, welcome. My name is Pat Baylooney and I'm the founder of Master Your Trading Mindset, which is an education and performance coaching business. And the reason I established Master Your Trading Mindset, I'm a trader myself. I've been trading for the last 6.5 years. And a couple of years into my journey, I picked up my first round of private investment. It was a $100,000 investment. And I had a good idea of the technicalities towards trading, how to read charts, how to execute in the markets. But at that time, I had no understanding of my psychology, of my mindset, what was going on in my head. And as a result, I was a victim to a lot of the challenges like over trading, like revenge trading, like being emotionally on tilt after losses. And that ultimately led me to losing that first round of investment. And put me on my journey to go and understand and study psychology on a deeper level. And I studied under some of the best names and the best individuals in the industry of psychology and human behavior. And I'm on a journey now to continue to learn, continue to study, and put these principles together to help you guys and girls overcome your psychological challenges as traders and ultimately help you get funded or scale with funding as well. And today's video is for you ICT traders, for you SMC traders as well. I'm going to be diving into the most common challenges that I've seen from you guys and girls, and I'm going to be giving you practical and actionable insights. And we're going to talk about the theory behind it first, and then I've got a couple tools that I want to pass on to you guys and girls that you can implement into your trading to, one, lower the emotional volatility you experience as a trader, lower the stress as a trader, and to ultimately help you make more money, because I know that's for a lot of you the ultimate goal. So without further ado, let's get into this particular masterclass, this particular lecture, which is all about your mindset and how you can put things in place to ensure your success as an ICT SMC trader. Now, the big problems that we're addressing in today's lecture, let's go through them one by one. There are 3 key challenges that we'll discuss and we'll address, and I'll be giving you insights, proven actionable insights, ideas and tools that will help you overcome these challenges. So we're going to discuss them first. I'm going to give you the insights towards the end of the lecture. The first common challenge that I've seen is traders have lack of confidence in their particular system. They may have watched a few of the ICT videos or SMC videos, wherever they've come from, and you want to go off and get the results that your mentor has, and all of a sudden you lack confidence in the system. This is a very common challenge that I see, lacking confidence in the system, which we're going to address, we're going to put solutions in place for. The second thing is greed, and greed manifests in a couple forms here that we're going to address. The first one is getting too caught up in the lower time frames. Traders learn the principles and they go straight to the lower time frames without understanding multi-time frame analysis and understanding the principles on a higher time frame. They dive down to the lower time frame because of this greed dynamic. They want to make money here and now, and they're caught up. They think that the lower time frame they go to, the more money they can make. And often, most of the times, from what I've seen with clients, at least initially as a trader, of these principles, of these concepts, it's not the case. You have to master the principles and become proficient in them before you can then go to the lower time frames to make more money quicker. And greed also manifests in over trading. Trading when setups aren't there to be taken, or trading too many lower quality setups, or setups that aren't even part of your plan, which we're going to discuss as well. And that's ultimately the third challenge that I see most consistent with my clients, with my students, is this whole idea of not sticking to their trading plan. For a lot of the traders that I've seen, they don't even have a trading plan. They don't even have a mechanical step-by-step system that resonates with them, that they know, like a checklist, like the back of their hand, that they can execute in the market with. Most traders don't even have that. And those few that do, they can't stick to it. I'm going to be addressing the underlying psychological challenge that's driving not sticking to trading plans, and having greed in the market, and lacking confidence in your system. So let's get into those now. Now, the first challenge we're addressing here is a lack of confidence. Where does this stem from? Okay, there are a couple different dynamics that can be happening here in the psychology that I've seen consistent with these traders. The first one is they're expecting themselves to be someone that they're not, right? Or if you're just lacking confidence as a trader, at times we can be expecting ourselves to be someone we're not, and in other terms, trade in a way that isn't congruent with us. Trade in a way that isn't congruent with our risk tolerances. Trade in a way that's not congruent with our personality. Now, my understanding is that as an inner circle trader, or as a smart money concept trader, the ideas, what you look for in the market from a technical standpoint, you're given those. You have a very specific set of criteria. You've got a checklist that you look for. Now, each trader is going to interpret that checklist slightly differently based on their risk tolerances, based on their personality. And my point here is a lot of traders are given that checklist, and they're going off and they're trying to trade it like their mentor does, or they're trying to trade it like other traders do, when that may not necessarily resonate with them. The lack of confidence comes from when we expect ourselves to act in a way that isn't congruent with who we are. So like we're going to talk about in the solution here, you take that initial checklist, you take the criteria, because that's the foundation of the way you trade that system. But then as you go and test that, and as you go and collect data on that, you're going to find slight abstractions, you're going to find slight nuances to the strategy that suit you better. And let's say, for example, you're a little bit more risk averse, the way you go and execute and the way you interpret certain criteria may be slightly different, and you wait for maybe slightly extra confirmation. Or if you're slightly more aggressive, you wait for less confirmation. And these are things you need to figure out for yourself. But when you do, when you figure out how to trade that checklist congruent with who you are as an individual, congruent with your risk tolerances and your personality, that's where the confidence comes, which we're going to talk about in a second. And a big part of the lack of confidence here, like I just mentioned, is blindly following a system that you haven't even tested yourself and you haven't created a trading plan for. And I see this so common in the trading industry, where there's an individual who's doing incredibly well, a mentor, and they're trading a system very well, and they teach this system to their students, and the students think they can just replicate the years, the decades sometimes of experience of the mentor just like that, without having put in the time to test that system, without having gone through the cycle of winning and losing and developing the feeling of that system, the intuition of that system, and finding the nuances of that system that work for them. So blindly following a system just because it works for someone doesn't guarantee it's going to work for you. And it's incredibly important, like we're going to discuss, to develop confidence in a system, to develop success with a system. It takes time testing and finding those nuances and finding those ways that you can fit that system to your own personality and risk tolerances. So you're given a set criteria, which is great. You know what to look for in the market. Now what you want to do is you want to test this over enough data, at least 50 entries, and develop enough data with setups that work for you. And when you're developing that data, you need to be brutally honest and ask yourself, is this something I would actually be comfortable risking and putting real money on? And that helps you develop your trading plan and your own trading plan and entries that suit your risk tolerances and the way you love to trade. And there's a few things here in that last point that you want to create a mechanical trading plan. It needs to be step by step. The reason I encourage a mechanical trading plan is because you can't expect consistent results and consistent profitability unless you're consistently executing every time you come to the market. Too many traders have too wide of a variance when they trade. Because some days they're feeling a little bit, more, they feel a little bit more risk in the market and they're going to trade a little bit more conservatively. And some days traders come and they feel a little bit more risk-free. Maybe they've had a coffee before they trade and they feel a little bit more confident in their abilities. And they're going to come to the market and they're going to trade with that risk tolerance affecting the type of entries they take. And that variance there affects your ability to have consistent profitability. But if you have a clear step-by-step trading plan that's mechanical, every time you come to the markets, the way you execute is consistent, and as a result, you can expect consistent results from that. But you can't expect consistent execution of the market if you don't have a clear mechanical trading plan that suits your personality. Now we're going to dive into the solution here a little bit more. I've got a template, I've got a tool for each of you guys and girls to help you actually create a clear mechanical trading plan based on the principles you've learned. The trading plan is just a template that will help guide you in the best way of creating a system. And I find that, a lot of traders who come to me with psychological issues, the moment we clear up their trading plan and we create it step by step, it's now mechanical and it now suits their personality. A lot of the 50% of the issues resolved just because they've created a mechanical trading plan that suits them, suits their personality. Okay, hope that makes sense. Now the second challenge here is greed. Caught up on lower timeframes and overtrading. This is how greed oftentimes manifests through ICT, smart money concept traders. And this is what I've seen with clients. They get too caught up in the lower time frame, thinking that that's going to make them more money. But oftentimes what happens is they end up taking more losses. They take lower quality setups. They're not aware of the bigger picture and they get caught up in lower quality setups. And sometimes they also are over trading as well. Now, many traders come into trading because they see it as the magic bullet to make more money here and now. I think this is consistent across all strategies. Traders have unrealistic expectations in the market about what they think it can give them. And they're dependent and they're oftentimes desperate to make money here and now. Okay? They don't have balance in their life. They don't have goals in all 7 areas of life. They don't have a focus in all 7 areas of life. And they also don't have additional sources of income or big enough cash savings. And what they do is they're desperate to make money here and now. They have to make money here and now. And they come to trading thinking that's going to be the magic bullet that makes them money here and now. Or they don't have goals and balance in other areas of life, and all they do is trade 24/7. They haven't dedicated time to empowering their health or their relationships or their psychology, their mindset, learning. They haven't dedicated time to expanding who they are as an individual or becoming more self-aware of who they are and what they love doing. And all they do is they trade. And believe it or not, these two things here drive a lot of the overtrading, drive a lot of being caught on lower time frames. Let me explain. All of these things come together to create unrealistic expectations on the outcome, okay? Let's say, for example, as a trader, we want to make money here and now, and we're desperate for it, and we also don't have goals in other areas of life. All we do, our value is concentrated all in trading. That's our personality, that's our identity, right? Now what's going to happen is these come together to create unrealistic expectations in our mind about what the market's going to give to us. And we create this idea that I'm going to make money here and now, and I'm going to make it, and then we project that onto the market, now expecting the market to give that to us, and that drives the feeling to have to go to the lower time frames and overtrade. Because we have nothing else to do, we then, when you go to the lower time frames, thinking that it's going to give us more opportunities to make more money quickly, and oftentimes we neglect our trading plan, we push that aside because of these unrealistic expectations, these pleasurable expectations on the outcome that we've created in our mind, projected those onto the market, and we want to capture those. We want that pleasure, we want to capture those expectations. And we throw our processes out the window, we throw our trading plan out the window, and all we want to do is we want to capture those unrealistic expectations. And that drives the need to go to lower time frames so we can continue to trade, and that drives overtrading, trading when the market isn't ready to be traded according to our plan, according to our system. Okay, so this is a common dynamic that I've seen, driving greed, driving overtrading, and driving the need to go to lower time frames when it's not right for that trader. Now, as you become more and more experienced with the system, obviously the right thing to do may be to go to lower time frames. But in this scenario, I'm talking specifically about traders who just go to lower time frames, thinking initially without the experience that it's going to make them more money. Okay. Now we're going to talk about the solution of this at the end. But the final problem, number 3, is not sticking to a plan, not sticking to a trading plan. Now, like I mentioned, a lot of traders don't have a trading plan in the first place. So make sure you implement the first solution I'm going to talk about next. Create that mechanical trading plan with the template I give you, and then you want to implement this solution to ensure you actually stick to it. So where does this stem from? The need or the drive to go away from your trading plan? Now, I talk a lot about process-based versus outcome-based decision making. And I talk a lot about the difference between the virtual market, which is the market we have in our head that we create in our mind, and the actual or the real market. And traders need to realize that there's a difference between the real market, the actual market, that nobody knows what's going to happen next in, and it just moves and it ticks and it just does what it wants to do. There's a difference between that and the market we've created in our head. The market we've created in our head, we can, in our mind, create ideas of what we think the market's going to do, what price we think the market's going to go to, and in what time we think it's going to do that. And what traders do a lot of the times, they create these expectations, these positive expectations, these fantasies on the outcome, and they then project it onto the market, thinking that the market is going to do what we think it's going to do in our mind. And this is a lot of the times a driving force to go away from our trading plan, because you create an expectation that, all right, the market's going to move this particular direction in this particular time. And then we create all these fantasies about this is what's going to get me my funded account. I'm going to pass my funded challenge with this particular trade. Or I'm going to get the glory in my community about winning this particular trade. Or I'm going to finally be liked by my friends because I made this amount of money. And we create these fantasies and these positive expectations and these pleasurable expectations in the outcome. And we project all those onto the market. And because the pleasure in our mind is so great, we want to go and impulsively capture that like an animal does. And that oftentimes drives us away from our trading plan. So I'm going to make a statement that's really important for traders to understand, that going away from your trading plan and not sticking to your trading plan is a symptom of creating unrealistic expectations on the outcome in our mind and projecting those onto the market. Whereas if we don't set those unrealistic expectations in the first place on the outcome, what happens is we're now present with the real actual market in front of us, and we're taking in information, we're taking in price over time that the market's communicating to us. And when we see that the market's aligned based on our criteria in our trading plan, we then make a process-based decision according to what the market's communicating to us. That's what the professional traders do. They've got a system, they don't set unrealistic expectations in the outcome in their mind, and they're observing what the market's communicating to them, and they're acting according to what the market communicates to them, if it aligns with their trading plan. That's what professional traders are doing, and that's what ultimately leads to consistent profitability. But the moment we set expectations in the outcome, we cut ourselves off from listening to what the market's communicating to us because of confirmation bias and disconfirmation bias. And I talk about that extensively in my 12-week program. But we have biases and we have cognitive biases that stop us from actually listening to what the actual market's communicating to us the moment we create ideas in the virtual market. So what I'm saying here is incredibly important to understand on a psychological level, and I'm going to give you a tool that will help you build up self-awareness of what type of decision you're making. Okay, so I know it was a bit of a ramble, but it's really important. So a lot of the time our expectations on the outcome, on the price that we think $1 is going to go to, how long we think it's going to take to get there, gets the better of us, and we expect the market to bend to our expectations. And when we set unrealistic expectations in the outcome and we project them onto the market, we are now impulsively driven to trade to capture the pleasurable expectations. We throw process out the window and we want to capture that pleasure of the expectation, even though it may not have any basis in the actual real market. We just create this idea in our mind. And this is the difference between traders who are executing from their prefrontal cortex, their executive center in their brain, because they're professional, because they're process-based, and the difference between impulsive gamblers who are acting out of the amygdala, trying to capture their next high. And what I'm going to What I'm going to give you in this particular lecture is helping you transition from an impulsive gambler to a professional trader. Okay, all my principles are. That's what my 12-week program is all about. That's what my YouTube's about. That's what this lecture is about. It's super, super key to have an awareness of your psychology, an awareness of the different parts of the brain that fire and that are in control when making decisions. And what I'm going to pass on to you helps put the key human in charge that makes the best decisions, which is you. Okay, now the solutions here. Let's break these solutions down one by one. The first solution here is you want to create a mechanical trading plan that's based on your own data and your own risk tolerances. There's a link, there's a template to a link in the description that you want to go and click on and make a copy to your dashboard, to your Notion dashboard, so you ensure you have all the key things that you need in a trading plan, which we're going to dive into in a second. Okay, but this is really important. You want to go and collect data in the market by back testing the principles. You think of it as a funnel, right? You go and learn, you watch the content, you get as much information from that content as possible. You take notes, you divulge the content, you maybe do it twice, maybe do it 3 times just to really understand it. And then with your newfound understanding, you go and backtest the market to collect all this data that you put in the top of a funnel. And then after you've put it through the funnel, you put it together in a way that suits you, your own risk tolerances, and that resonates with you. And then you funnel all that information into a trading plan, into this template I'm going to give you. Okay? So I'm going to bring out that template. Make sure you go into the description and make a copy of it now so you have that and you can access it whenever you need. Okay, so the template is very simple. You want to get clear on your entry, right? The first thing you need to look at as a trader is your entry. Then you need to look at your exit, your management, and you also need to have an awareness of how much you're risking. That's all you need in a trading plan ultimately. The first thing you're looking for is the area of value. On the higher time frames, what is the area of value you look for? What are the few things that give you an indication that on this higher time frame, this to me is a really great area that aligns, that I know based on my previous data is a high probability area to take an entry. You want to identify the higher time frame area value. What is it you specifically look for? What are the few things you look for and in what time frame? You want to create simple rules, a simple checklist, and maybe some images to create that visual perception of what it actually looks like in the real market. And then, okay, once this area value is met, I'm going to then go to a lower time frame. And then what are the specific 1, 2, 3, 4, 5 criteria that I need to see on the lower time frame for the market to meet for me to then take an entry in that area? So I've identified the high probability area of value, and then I've identified the specific entry criteria that I look for. And like I mentioned, you want this to be as mechanical as possible. And there are going to be different variations. There are going to be different how aggressive you go on some entries versus other entries. You want to put all those distinctions in here, but you want to put it as mechanical as you possibly can to ensure that you have as little variance when you come to the market in your decision making. The next thing you look for is where do you put your stop after you've entered? Where does your initial stop loss go? Do you trail to break even or do you take partials? What's your break even rule? Do you have active management, meaning do you actively trail your stop? If so, what are the criteria? What are the simple rules? What are the checklists you need to see to then actively trail your stop? Or do you set take profits? What are the criteria that you need to see to set take profits? Or do you do both, a bit of both, right? You want to get clear on your rules for your entry and your exit. You want to use this template to guide you. Insert simple rules, checklists, and a picture. And then finally, what's your risk management? How much do you risk per position? After you've maybe taken multiple losses, do you lower your risk? If you've taken multiple losses for the day, do you stop trading? What are your risk rules that resonate with you, that work for you, that are congruent and work with the funded company you're with as well? You want to take all these things into consideration and put them in a trading plan. It doesn't have to be complex. In fact, the simpler it is, the better. But you want to put it together in a way that resonates with you, that meets your risk tolerances, and that will allow you to come to the markets and trade with as little variance as possible. That's really key. Because remember, you can't expect consistent results without consistent execution of a trading plan. And don't expect consistent execution of a trading plan if your trading plan isn't well organized and step by step with a checklist, exactly how I've presented it here. Okay, so use this as a template, use it as a guide, take it and put it to your trading plan, ensure you have everything you need there to consistently execute in the market. Okay, so make sure you go and download that template and you implement it after this video. Now, the second thing here is you want to ensure you have, first and foremost, additional sources of income as a trader. If you're coming in just learning initially in the initial stages of trading, it's really important that you have other sources of income, like a part-time or a full-time job, or other businesses or other side projects that generate income for you. Or on top of that, you have significant cash savings that cover your expenses. Because a lot of the times having to make money, or the need to make money, or the desperation to make money is what actually drives the unrealistic expectations on the outcome, which ultimately drives the impulsive nature of overtrading, going to lower time frames, not sticking to your trading plan, etc., etc. So the moment you take care of the money aspect in your life, you free yourself up to just stick to executing on your process, executing on your trading plan. Meaning if a setup comes along that day that aligns with your trading plan, you execute because it says so in your process. You don't have to trade that day. You trade when the market aligns with your processes. And this will help push you from outcome-based decision-making into process-based decision-making, which is key, which is consistent with the most successful traders I've worked with and observed. The next thing here is you want to ensure you have balanced goals in all areas of life. What this means is you have 7 areas of life. You've got your health, you've got your wealth, you've got your business, you've got your family and relationships, you've got your mindset and your learning, you have your spiritual mission, your who you are as an individual, the essence of who you are, and you've got your social leadership, the impact you want to make in other people's lives. You want to ensure that your life is balanced and you have goals or focus in, if not all, most of those areas of life. And what this will allow you to do is it will ensure that every day you're working to developing yourself holistically as an individual. If all you're focused on is your trading, but you haven't dedicated time to empowering your relationships, for example, and you've got extremely damaging or there's a lot of arguments in your relationships, that's actually going to affect your trading. And if you haven't focused on your health and empowered your health and you have health issues, that's ultimately going to affect your trading. So any of the 7 areas that you don't focus on empowering, they're ultimately going to affect your bottom line as a trader as well. So it's really important as a trader to empower yourself holistically, all areas of life, to ensure that if your main goal is trading, you're the best possible trader you can be. What I've seen, the best traders are traders that are dedicated to self-excellence in all areas of life, and they're empowered as individuals. So as well as having additional sources of income, you want to ensure that you've diversified your life and you've got goals in all areas of life, and you've structured daily high priority actions on all areas of life. The other thing this is going to do is it's going to give you time to do other things. You already scheduled your trading time. You know when you're trading. Great, you do your trading for the day, then you go and focus on the other areas of life. Maybe it's something to do with your business, growing that, or maybe it's something to do with your health, your relationships, your learning. That's going to take you away from the charts, ensure you don't overtrade, ensure you just stick to your plan for that day. Plus, you can also empower the other areas of life. A lot of the times, less is more with your trading, and having balance and having a holistic lifestyle that's dedicated to empowering all areas of your life is ultimately where I've seen traders' results go through the roof. It's really important. The next thing here, and I've put a little mind-blowing emoji there to emphasize this point. Not enough traders are aware of the expectations they have before trades. It's the subtle, quiet, unconscious voice that whispers at the back of their mind. A lot of traders aren't unaware of what type of decision they're making. Are they making a process-based versus an outcome-based decision? So you want to become, the third solution here is you want to become acutely aware of your expectations prior to trades. And you want to train yourself to stick to process-based decisions. Now I have a free tool, my Bulletproof Your Mindset tool, in the description that I want each and every single one of you guys to download and start using before every trade you take. This tool is going to help bring up self-awareness about what type of decision you're making before the trade is taken. And you're going to become aware of, am I making a process-based decision versus an outcome-based decision? What are the expectations that I have in my mind before this trade? And you're also going to realize that the more unrealistic expectations you have about that particular trade and which direction it's going to go and what it's going to give you, and all those things about funded accounts and being recognized as a great trader in your community, the moment you realize that those positive expectations are ultimately the things that cloud your rational judgment on decision making and leave you susceptible to being extremely emotional after the trade. Because the most painful losses aren't necessarily when you lose money. The most painful losses are when you lose the positive expectations that you're projecting onto the markets. And I want you to prove this for yourself. I've seen it over and over with myself and with clients, that the most painful losses we take as traders are the ones that in our mind, we lose the positive expectations that we're projecting into the market. So by using this tool before every trade you take, you're going to build up self-awareness about what type of decision you're making. You're going to move towards process-based decision, which is going to lead to sticking to your trading plan consistently, which is going to lead to consistent profitability. Plus, it's also going to help lower emotional volatilities because now you're not going into trades with unrealistic expectations on the outcome, but you're sticking to your trading plan. So go into the description and get that tool. It's completely free. With the tool, it comes with a theory lesson on it because there's a little bit more theory that I want to pass on to you guys, an understanding of that, which would make this video far too long. And then the other thing is it's a walkthrough on the tool. So I show you step by step how to actually use that tool and implement it before every trade you take. It would make a huge difference in your trading if you use that tool before every trade you took. So go into the description, download it, use it, implement it, and I guarantee it's going to make an impact on making better decisions as a trader and also lowering the emotional volatilities you experience as a trader. Okay, and it's also going to tie in extremely well with what we've discussed today and actually help you implement what we discussed today. Ultimately, you can have all this theory, I can give you all the understandings, but if you don't go in there and create a mechanical trading plan, if you don't balance your income sources and balance your life and create high priority actions in all areas of life, and if you don't actually become aware of your expectations before trades, nothing's going to change in your trading. So please put a focus and an emphasis on actually implementing these principles and these tools. I've created my 12-week program dedicated to those students to ensure that they actually have the accountability to follow through with the principles I teach. I truly think that it's not understanding or education that's missing in the industry. It's the willingness to follow through with the education. And it's the willingness to follow through with the principles you learn. I've done a lot of research and I've gone through a lot of losses to get to this stage of presenting these summarized points here. It's really important that you follow through with them and you implement them if you see value in doing them in your trading. Okay? Now, my final summary here, my final notes. The first thing here to summarize today's lecture, to summarize today's masterclass, is you want to create a mechanical system that's based on your risk tolerances. Link in the description, make a copy of that tool. The second thing here is you want to balance your life and income sources. You want to ensure that you have goals in all areas of life, and you want to ensure that you have high priority actions that you can focus on daily that will get you to those goals. And the third thing here is you want to focus on making process-based decisions by becoming acutely aware of the expectations you have before you take a trade. And the Bulletproof Your Mindset tool is going to help facilitate that process. So make sure you go into the description and download that and you start using it before every trade you take. Okay, so this is my presentation on what's stopping you psychologically from having success as an ICT, as a smart money concept trader. I really hope this was of value to you. If it was, please share it with your friends. Please share it in your communities. Please get this out there so we can put a focus and an emphasis on focusing on mindset. I think mindset is heavily neglected in this industry. And I think that if traders learnt these principles, it could make a significant difference, not only in their trading, but also in their life. I look forward to seeing you guys and girls in the next video. If you found this useful, please subscribe, please like, please comment, because there's many more videos coming out on this. There's many videos been posted previously on my channel that will also help, so check those out. But I look forward to seeing you guys and girls in the next video. Cheers.